I'm Kim Insley. Thanks for joining us for Navigating Life Transitions, a podcast where we bring together advisors experienced in financial life planning to talk about ways to navigate life's biggest challenges and changes, opportunities, and decisions, from growing a family to losing a loved one, promotions to retirement, marriage to divorce. We discuss these pivotal moments that could benefit from the guidance that a financial advisory team can provide. Today, we're talking about financially gifting to the next generation. How do you navigate that opportunity to gift money as your children age, and then as your family expands with grandchildren? Joining me are two advisors from JNBA Financial Advisors, serving clients in Minnesota, Florida, and throughout the U.S. Elise Huston and Chris Mastley, who work with people who are facing this question. Elise, we've had podcast episodes that have kind of touched on this topic, but we're going to devote an entire discussion to it right now. So let's start with the why. Why do people gift in this way?
Yeah, so there's a lot of motivations for an individual or a couple to decide they want to make financial gifts to their children or grandchildren during their lifetime. For one, maybe as they've been working with their financial advisor, they've come to the realization that they do have more than enough, more than sufficient assets for their own lifetime, for their own needs that they're anticipating at this point. So there's excess and there's room to maybe give more to family during your lifetime. Maybe also they have come to realize they've accumulated such wealth that they actually have some estate tax considerations that they need to plan around. Right now, under the current law, a person can die, an individual can die with about $12.9 million in their name at the federal level and not have to pay any estate tax. But in Minnesota, that level is $3 million. So between the two of you as a couple, each having $3 million, you could pass in your own name free of estate tax. There may be some opportunities, depending on your wealth, to do some gifting during your lifetime to try to stay under those limits. But also for a lot of people, it's probably just the fact that they want to be able to see their kids and grandkids enjoy some of these funds while they're living versus just giving it to them at their passing. Maybe it's even an opportunity to create ease for your kid or grandchild through, maybe it's giving them some money to put towards their first home down payment or a car, or maybe even gifting them some money that they can use towards student loan payments that they have at this point. But ultimately, that decision to make those gifts really should be because it not only aligns with your goals and values, what's important to you, but also because you know that it's within your resources to do so.
That is huge. So, Chris, you've worked with some families, a lot of them, and you've helped them navigate gifting to their children, to their grandchildren while they're still alive so they can enjoy seeing this impact that it has on the lives of those people. What would you add to that?
Thanks, Kim. I think it really starts with just an underlying goal of why are you giving in the first place? Is it, one of those reasons Elise mentioned, maybe reducing your taxable estate, maybe doing it because you're in a spot now where you're meeting all of your own financial goals that you have for your own retirement. And maybe it is that you just want to help out that next generation, whether that's your own kids, whether that's grandkids. And so really we like to start and understand what the goal is in the first place and making sure the structure of the gift is set up in a way that really meets those goals that you have for the next generation. You probably often hear about it, but as financial advisors, we say it's important to save for your own retirement first, right? So if you're not on track for your own retirement, saving for your own goals, gifting probably isn't in the cards for you today. We would much prefer waiting until those goals are met and maybe gifting later in life. Now, that doesn't mean you can't do anything, but, we just want to make sure you're on track for your own retirement first. I remember working with one family, and they really wanted to give to their grandkids, and education was really a number one priority for them. And I remember talking quite extensively to them about what it is about education that they wanted to do. And they didn't want to just pay 100% of the grandchild's tuition, but they really wanted to make sure that that grandchild had skin in the game. And that for them didn't mean that they didn't want to pay for 100% of it, but they just didn't want the grandchild to be able to go into it knowing that they were going to, come out of college 100% debt free. And one of the things that was important to them is not for the grandchild not to know that they were actually going to be paying 100% of it, but they went into it saying, hey, if you were able to keep up a certain grade point average kind of throughout your, for your degree, then the grandparents would then pay kind of that next semester tuition for them. But the interesting part about it is with the way the 529 plan works, right, is you have to have a qualified expense withdrawn from the 529 plan in the year that it occurs. While that might work out one semester, it might not work for every semester. And so it was, for them, it was really kind of tailoring that plan. How do we maximize the dollars, be most tax efficient with them, but then also, live out your values where we're not assuming that, you can actually do it most tax efficiently every year. So
yeah. The other thing too, you talk about saving for your own retirement is important, and maybe you don't have that huge gift you can give right now, but a grandparent, if you start a 529 plan when the child is born, and you don't have to put that much money into it to have it grow to really be a significant amount. So it is possible to do life-changing things with just a small amount of money to start with.
Absolutely it is.
So Elise, let's say you figured out that you can afford to gift to the family or whoever. And then the next question is, what is the best way to do this?
Yeah, so there's probably an infinite amount of ways to gift to people during your lifetime. But for the sake of today's conversation, I'll focus on maybe some of the most common ones that we see people explore or utilize during their lifetime. So, Chris has already talked about this a bit here, but, gifting for education is a fairly common wish. We hear that quite a bit from the individuals and families we work with. So great way to support education is through a 529 plan, an education fund. So, some things we've seen people do is maybe a grandparent matches contributions to a 529 plan that a parent was already planning to make, just really kind of stretching their dollars even further. And then again, to your earlier point, that compound growth over the life, that young life of the kid all the way till they're age 18, it can have a big impact on the amount of money that's available to them when they go to school. But, at times maybe the parent or the grandparent wants some more flexibility in how the funds could be used for that child. Maybe they don't want it to just be an education resource. So that's where, maybe even exploring something like a custodial or a minor's account can be a worthwhile option. There's pros and cons to really all of these structures. If you're using a 529 plan and you take money out that's not for a qualified education expense, there's going to be different penalties or tax owed, is where if you're working within a custodial or a minor's account, then you're working with, that age of majority where once the child reaches, most commonly it's age 18 or 21, they kind of have unrestricted access to the funds at that point. So while you are, liking the flexibility that maybe they could take it out to pay for a car while they're at school or
suddenly
things like
they're backpacking around Europe and you didn't quite plan on that.
Yes, they have a little bit more access to funds than maybe you had initially intended. Another kind of interesting and I guess I would say attractive option is if you have a younger child or grandchild who's maybe just starting off in their working years, be it high school or college, and they're earning income now, you could even help fund Roth IRAs for them.
I love that idea.
So that they are saving in a tax-free vehicle for their own retirement. They can start to see early on the benefits of, again, that compound growth and accumulation of wealth as a young person. So that can be really motivating.
There's a huge education piece in that.
Yeah.
I love that.
Yeah, completely. Otherwise, too, of course, just using cash or even appreciated securities or stock from your own portfolio is another great way. If you know you want to gift money to your grandchild this year for their down payment on a home to help, contribute towards that. Certainly just a one-time gift of cash or even stock at that point in time is a worthwhile option to explore as well.
Lots of things to think about. So Chris, you've decided you want to make the gift and you've figured out kind of how you want to do it. So how do you decide on the amount each year when you're thinking about gifting to family members?
Yeah, a lot of times when we are working with an individual or a family, they kind of come to the table with an amount in mind. Maybe we can crunch the numbers behind the scenes where, hey, if it is you want to fully fund a 4-year, tuition. Well, we can run the numbers and say, hey, what does that look annually? Sometimes it's a one-time event that the family says, hey, we want to gift $5,000 to each of our kids for the holidays, and it's kind of cut and dry. The limits that we want to pay particular attention to is what's referred to as the annual gift tax exclusion. And every year, usually that amount goes up with inflation. And here in 2023, it's $17,000 per person. So any person can give another person $17,000 without any tax ramifications.
For you or that other person?
Correct.
Okay.
If you're married, a couple can then give $34,000. And then things really start to compound from there, because if you're married, you can gift. If your child's married, well, then you can gift your child $34,000. You can give their spouse $34,000. Then all of a sudden you're up to $68,000. Wow. And this annual gift tax exclusion, I would say 90% of the families we talk to really satisfies what they want to do. Whether that's gifting cash, appreciated stock, as Elise mentioned, gifting property, buying vehicles or transferring vehicles. And so I do think, those limits really do encompass most of the planning work that we talk to clients about.
There are exclusions too, right? They're carve outs.
Yeah, that's a good point, Kim. The few that really come up, first and foremost, back to tuition again. If a grandparent or parent pays the university or college directly, i.e. it doesn't go through the student's pockets, then any amount of money is completely excluded from that. And so that's a really great way to fund a college expense without having to, be limited to these annual gifting exclusion limits. The other one is medical payments. And so if you know of someone who, went through, cancer or other, medical treatments, unfortunately, sometimes people don't have coverage, or, their coverage excludes certain things. And all of a sudden, it's not uncommon to hear of someone having $10,000, $20,000, $30,000 of uncovered medical expenses. Well, that's where you can step in and, again, gift straight to, the clinic, the doctor's office, the hospital. If you pay the bill directly, that amount of money does not hit that $17,000 at your max.
And doesn't affect your taxes in any way, or?
It does not. No, correct. Now, okay. Sometimes family can feel, like a charitable organization, but when we're talking about, gifting, to individuals, paying tuition, paying medical bills, those are not deductible expenses either. So,
noted.
Yes.
But these are huge hurdles in people's lives. So those gifts are amazing.
They definitely are. Yeah. There's two more that I'll quick talk about too that I think are kind of funny. Well, one in general. I remember doing my College for Financial Planning classes way back when I was going to get my certified financial planning designation. And I remember kind of laughing out loud at this, and it was about political contributions, right? So most candidates you gift to, right, it's not a charitable deduction. And so, typically you'd be limited by that $17,000, but our politicians, they made sure to add a disclaimer in there where, they're exempt as well. So so your favorite politician, you can always gift as much as you want
directly
to them.
There.
Yep, exactly.
Oh my gosh.
Exactly.
Okay. Well, say you find yourself wanting to financially gift to your child or your grandchild. Is there, Elise, a best time of year that one would do this?
So again, kind of timing for these gifts really depends on you personally and your goals for the gift. I work with a family who they really do want to gift that annual amount to their kids and grandkids every year. But for her, it's really important that that's done around the holidays. She likes to include a note with it, encouraging them to go do something special or fun with the money in the year ahead. Oftentimes she'll include a little story about something fun that she and her husband got to do during their lifetime. So there's a lot of meaning in that to her. So time of year for her is important. And the end of the year is that time that she really wants to be making those gifts. But really, no wrong time to have this conversation, no wrong time to, make these gifts. I would say if you want to open that 529 plan and have it fund a large portion of your child or grandchild's education. Again, starting when they're young is important because then you do benefit from that compound growth and just, continue to maximize those dollars and those contributions you've made to that account for the child or grandchild. But I would say, to the points that Chris has raised before too, we can help to model a lot of that out for the individuals we work with. How much do they need to save? How much can they give comfortably each year without fear of running out of money for themselves? But yeah, no wrong time to have that conversation.
And I just want to say, I love that you brought up the idea of gifting for a retirement fund, because so many people don't think about that, because we're talking about babies here, right?
Mm-hmm.
But for the future generations, that's just going to become more important. And the education that person gets from seeing that grow, and then it becomes a habit. So there are gifts where you just write a check, but there are gifts that go beyond that. The notes to your clients' family members about the things that they would spend their time on. I mean, that's a gift too. So
completely,
there are ways to give that aren't just the check.
Yeah. And it has a little more meaning than just the money. It's kind of instilling some of your own values and things you've learned on the next generation as well.
Yeah, I love that. Well, I want to thank both you, Chris and Elise, for the conversation today, and thank our listeners as well. And we hope that you will listen to our other Navigating Life Transitions podcast. You can get the full list of available episodes online, JNBA navigatinglifetransitions.com. It's all one word. I'll say it again, JNBA navigatinglifetransitions.com. And you can, of course, help yourself to a number of free resources available on JNBA's website, jnba.com. If you have questions about financial gifting, or you want to learn more about how JNBA can help you with your financial life goals, give them a call at 952-844-0995. Or you can use the contact form on jnba.com to schedule a complimentary, no-obligation call with their experienced multi-generational team. Thank you again for listening. I'm Kim Insley, and I look forward to navigating more life transitions with you on our next podcast.
Past performance may not be indicative of future results. Different types of investments involve varying degrees of risk. Therefore, it should not be assumed that future performance of any specific investment or investment strategy, including the investments and/or investment strategies recommended and/or undertaken by JNBA Financial Advisors, LLC, henceforth JNBA, or any non-investment related content will be profitable, equal any corresponding indicated historical performance levels, be suitable for your portfolio or individual situation, or prove successful. JNBA is neither a law firm nor a certified public accounting firm, and no portion of its services should be construed as legal or accounting advice. JNBA is not an insurance agent, and no portion of the above should be construed as insurance advice. All insurance issues should be addressed with the insurance professional of your choosing. Moreover, you should not assume that any discussion or information contained in this podcast serves as a receipt of or as a substitute for personalized investment advice from JNBA. A copy of our current written disclosure brochure discussing our advisory services and fees is available upon request or at jnba.com. The scope of services to be provided depends upon the needs and the requests of the client and the terms of the engagement. Please remember, if you are a JNBA client, please contact JNBA in writing if there are any changes in your personal, financial situation, or investment objectives for the purpose of reviewing, evaluating, and revising our previous recommendations and/or services, or if you would like to impose, add, or to modify any reasonable restrictions to our investment advisory services. Unless and until you notify us in writing to the contrary, we shall continue to provide services as we do currently. Please note, all services provided by Kim Insley are separate and independent of JNBA Financial Advisors. For complete disclosure information, please visit jnba.com/disclosure.